Hey, good morning, all. So, I'm going to be doing a few videos this week, hopefully, on this coming week in YouTube. I was going to be posting little snippets, I guess, in TradingView, but I'm trying to kind of transition over into using YouTube a little bit more. Okay, so if you don't follow me on YouTube yet, it's probably a good idea too, because I will be cutting back on some of the TradingView streams. So, obviously, for you guys that also know me, I've actually got a book being released next week on the paperback versions. I think it's already out on Kindle, which is really cool. But if you've already pre-ordered it, one thing that I might not have mentioned or not mentioned enough is that we're actually running a competition on that particular pre-order. And basically, if you come across to the website, and I'll put this link into the description, I'll put it up the top right as well on the YouTube video. Um, you can basically, if you pre-ordered the book, you can enter yourself into the prize draw. And what will actually be given away here is memberships ultimately to Discord, one-to-one mentoring sessions. And I've stopped doing these sessions ultimately, so it's obviously a kind of a weird thing to kind of come back for. But yeah, I'll be doing a couple of sessions for obviously the people who win the prize draw. So all you got to do is once you've pre-ordered the book, then come into this, fill in the form. This is the only awkward bit. There's actually a requirement to email kind of proof of purchase to this at the bottom. So you just copy the email address and send it on, and then obviously you get a chance then once the book is fully published and out, then the publishers will be running the prize draw on the back of this particular form. So again, if you haven't pre-ordered it yet, there's still a chance obviously between now and the 11th. So again, I'll share this link in the description as well as the top right now. So yeah, so that's obviously my massive shilling over. Sorry guys, there's no Bybit link or other kind of shit nonsense of other people's stuff. It's just a chance to learn, so nothing really that exciting. So I guess in terms of where we are on the current view and the current situation, you know, I keep saying, and I've said for months and months and months on end, I think for me, there's nothing really exciting happening right now, other than the fact that we are making this kind of institutional transition, right? Now, obviously, everybody's looking for an edge. Everybody's looking for a place to be and a way to find something that's yeah, just any kind of advantage really. I think anybody's looking for something that will give them the where we go next and why. Right now, what I've talked about to our subscribers in Discord is there's always an opportunity, right? And if you come down on a 15-minute time frame, there's always an opportunity. The trouble being is most retail traders, they ultimately lose money, right? It's 90% of traders plus lose money. And the main reasons that I find, right, is they ultimately lose on the fact that they want to come to the market with a view of getting rich quick, right? And it tends to be with a small amount of capital. So that's the first kind of major problem. So what they then do is they heighten the risk, and in addition to heightening the risk, they want to find, as I said at the start of the video, they want to find an edge. So what they assume to be an edge is the same thing as everybody else, right? And it's almost this kind of pattern. It's almost like kids. They get born, they get to 3 years old, they start kind of preschool, nursery. They get into school, they kind of taught to go to school. They get up to 15, 16, 17. They then go to college or university. Yeah, and that's kind of the cycle, right? By the time they're 20, 25, let's start work. You work until you're 65, you drop over dead, right? Or technically retire. I think the point being is that when traders come to the market, they assume that this is, an easy fix and a quick fix. And a lot of the time it can be. I think, is it a place to come and get rich quick? It kind of is, but that's the same as playing the lottery, right? If you're going to put $100 down and expect a million, right? It's no different than buying a lottery ticket. what you want to do is to grow kind of steadily in terms of how you progress, not only yourself, but the attitude towards the market, right? And the main point of being kind of in you for the long run, right? So, it doesn't have to be exciting, but going back to using a 50-minute time frame and looking for more and more opportunities, the more and more you take, the more and more risk that you add in, to the equation. So what a lot of people then do is they go searching for things online, and you find these kind of clickbaity type videos. It's often guys with soy faces, Bitcoin to 100K. And I think the trouble being is there's no logic or rationale backing these claims up, right? It's you see things like Bitcoin to 100K based on no, there's a trend line break, right, on a 30-minute chart. There's no sound logic behind this, right? So what you've actually then done is you've been sold the dream, and you jump in kind of at the wrong time, taking the wrong advice. Now, the next thing that new traders tend to do quite badly is the selection of indicators. And I think for me, what people fail to realize is that all indicators are lagging, right? There's very few that are leading indicators, right? And I would struggle even to name some, right? The general idea is you got to create this kind of bias. You got to give yourself, a fighting chance to at least be on the right side of a trade, right? Which means the only difficult part then is the entries, right? Now that's going to sound, again, almost kind of cryptic in terms of how I would deliver this. But the general idea is once you've got a bias, right, on a bigger time frame, and you know the kind of the general sentiment in terms of where you're going, it's so much easier to take trades even on a smaller time frame, right? So when I look back at Bitcoin's moves, and I guess this is what a lot of you, if you've kind of sat around and listened to me harp on for a couple of minutes, it's what you've sat around and waited for in terms of the kind of the golden nugget, right? Now, one of the areas for me with this is the fact that obviously what you've got back when you look to the left is you've actually got clues in terms of what happened in the first moves, what happened down here, what happened up there. You can see a nice little kind of curve up on the volume, right? You've then got a decrease on the, just look at the green for now, right? Then you've got a nice big spike, right? But ultimately then the volume starts decreasing to here before a nice big rally up, right? And this obviously then being this rally, all the way up to there, right? What you then had was the reaccumulation, right? And again, I've mentioned this and I've posted this, and you can find this obviously in, let's find this here. You can find this in this particular post. Let me find where it is. This always seems to jump when I click on to trading view for some reason. This one here, right? The phases of Bitcoin. I talked about this way back in January 21, right? As to why, and you can actually click on these. I don't know why it's not clickable at the moment. You can actually click on these and come through to why this was the reaccumulation phase, right? Now, the reason that I want to share this and the reason that this is really key is that if you understand where you are on the much bigger cycles, it's easier to comprehend where we will either end up, right, in terms of level and forecast, or the kinds of projections that you can then come back to and grab for later use, right? So when I called the rocket call and seeing a kind of a top here being the basically buying climax followed by the AR, you could easily work out based on the accumulation or reaccumulation as to where we're likely to come back, right? Which was why 28 was marked out, back in March, right? And I'm talking about, where we were at this particular point, up here, right? We hadn't even started to fall yet. Why I could actually pinpoint 28 as a target area to come back to, right? So once you got that overall bias, it's the same thing on the move up, right? You could call, where we were at the top, 1, 2, 3, why we'd come back 4, drop down. This was obviously August call. So, from this level here, why we were likely to drop down to then come back just above these highs, right? So the sentiment and the bias, right, is if you wanted to trade shorter time frames, knowing that we were in a reaccumulation, you could buy it on a on an hourly chart if you wanted. Knowing that we were about to distribute, you wouldn't want to be taking long calls, even on the smaller time frames, right? So once you've got some sentiment and you've got a little bit of a bias in your favor, the trade in the smaller time frames becomes just almost sniper entries, right? If you want to take them and you really want to take them, fine. But when you understand this, what you tend to find as the years go by, you want to spend less time in front of the screen. I'd rather play golf than look at the charts 24/7. When you can spend that time and you understand what it is you're looking for, you stop over trading, which means when you get a trade that you are really keen on, not only do you enter it with confidence, you can scale into it with confidence, knowing that your bias is in the direction that you've already entered in, right? You can lock in profits, which takes away a lot of the stress, and then you can start going smaller time frames if you really want, to kind of really accelerate that type of growth. But the general bias on the bigger time frame will give you a much better feel and a comfort factor in terms of taking these things, forward and on, right? Now, where we are at the moment, and this is where I guess the bias, kind of comes into this, is if you look at, this kind of key level, right? And this, I'm going to draw a big box around all of this, right? Because, for me, I keep saying nothing's changed. Nothing's really changed, right? I talked about this, all the way back in, what were we, November time, last year. I talked about why, this was going to be the same and stay the same, and where we are, kind of to now. If you look at what we've done kind of since, right? We've had one of two options, and I shared this yesterday on the Trading View stream, right? For me, you've got an ABC potential, right? You could have an ABC that brings us down to this level, right? So a lot of people's perception is that ABC is probably in, which means we're in a one. Now, just as I've shared you, right? There's a couple of key points. What does the volume do when we start going impulsive? The volume curves up, the volume darts up, the volume darts up, right? What happens when we ultimately start falling down, right? We start having this small level of an accumulation in here, right? Which for me is the first sign that my bias is correct. We then ultimately fall down, right? Which is still the sell-off phase, right? Which could have led to some kind of selling climax, right? What we then have is a move up. Now we've come down in volume as the price rallies on up. We have one spike that really isn't significant. Bear in mind where the price is now in comparison to where it was on the left. And then we start depleting the same green volume as we rise up, right? Which means at the moment, we're definitely not impulsive in terms of the current situation. And this is actually a good thing, right? Because as I said yesterday, and I've shared a couple of times before, if we're currently impulsive with this kind of move, we'll probably cap ourselves out between 55 and 65k, right? And again, that's already exhausted at the start of the move, right? That's like running a marathon yesterday and asking to run a double marathon today, right? This is the problem that a lot of retail fail to see. So coming back to the major points that I see as to why retail tend to lose money, they follow the wrong people, they take the wrong advice, they pick the wrong indicators, right, with too much expectation on getting rich quick. When you can use this bias to your advantage, even the smaller trades on the smaller time frames become more predictable. All right. So I'm going to leave this one like that for now. I hope you enjoyed this one. This is a little bit deeper than what I tend to do normally. So yeah, obviously, if you've already pre-ordered the book, don't forget to go to the website. I'll put the link back up there a second. Go to the website, fill in the form, email the proof of purchase, and then ultimately you get entered into the prize draw for some sessions, or obviously a membership in Discord. Um, Other than that, obviously keep an eye out for the next YouTube streams, as they're going to be more in line with this one rather than the level that I've been given in TradingView. So again, thanks for watching, guys. See you on the next stream.